Welcome to this week's edition of Liquid Options. My name is Eric, and in this video, I'm going to show you how I'm handling a losing bear call spread on the SPX in this ever relentless bull market. And that's coming right up. All right, so let's go ahead and dive into the chart. I first want to kind of point out that the new sort of all-time high was breached today and closed higher. You can see we closed at 28.74 and change yesterday. I'm doing this video on Saturday, and the previous close was 28.72. So yes, we are hitting an all-time closing high. There's going to be Dow 50,000 hats going on this weekend. But anyway, so I wanted to just kind of point that out. Let me take this off the chart just so we can kind of see what's going on. So I want to, before I talk about my bear call spread and how, I'm going to deal with this, basically a losing position I'm in, which, I always find myself every 2 or 3 months in a losing bear call spread. I don't do a lot of them. I kind of do. I've been doing a few this year. I've been still, as long as they're above the 200, I've been sticking to mainly put credit spreads, and I've been using the RSI here. I got more information on that, I'll talk about in a minute. I want to go back a month or two and talk about some positions I was in, which will make more sense as to why I have this trade on now. So on this previous pullback, we see we have the oversold RSI. Around this time, I had put on some bull put spreads around, and at that time it was below the 200, so it was very comfortable, took profits. And then as we started to get to this recent high, I was kind of in the camp that either this high would be sort of resistance, and this could be support, but it could also be sort of a magnet as well. So in this time frame, as we got a little bit oversold, I put on basically an iron condor where I had some put spreads here it was at the 27.80, and previously it was just above that high we just talked about, which I had the spreads at 28.80, so it was a little bit above. So since then, the market continues to drift up. I have since taken profits on my 27.80, so now I no longer have an iron condor. Let me just kind of talk about that. A lot of times, with certain movements, if you stay inside your iron condor, the one side sort of hedges the other, but at some point the losses start to be greater and the hedge sort of diminishes over time, and that's what happened. So I took profits on this bull call spread. I'm sorry, bull put spread, and so I'm going to remove that. So at this point, I'm basically got this bear call spread that's underwater. So what I did in that time frame was also I rolled it up and out. So now I have a bear call spread at 2,900 with the October expiration. So I got a lot of time on this one, but we're actually very overbought. So what I'm kind of waiting for is another one of these little 2 or 3 day pullbacks, and then what I'm probably going to do, depending on the veracity of it, if it's kind of like super consolidated, then I might my position size and stuff might change. But basically, what I'm going to be looking to do is when the RSI gets oversold again, and I'm using an RSI of 4. And I got actually, if you guys have seen the previous videos, I got a whole series on this indicator and the moving averages here. I'll talk about in a minute. But if the market does get oversold again on a short-term basis, I would be looking to put on an October put spreads, some October put spreads, and with that credit, try to I'm going to stay in October for now. I'm going to try to roll the strikes up here. So for example, if I can sell a put credit spread here for, let's say, $1.50, and then I can take $1.50 and use that $1.50 to pay for the bear call spread to move up, let's say 20 points or 30 points or whatever I can get at that time, then that's what I would do. And then it's not really going to, I'm not going to make any money on the put credit spread, but it allows me to do is help minimize the losses, and potentially, both trades could become a winner. So, that's sort of the position I'm in. And let me just say, I am not an expert on adjusting. This is something I'm working on. So I'm actually, trying to share what I'm doing in the Facebook group. There's a lot of guys that are way better at this, so I'm learning from them. So if you guys want to learn more about adjustments and stuff, I definitely come check out the Facebook group, and it's free. And you got to answer some questions. There's no spammers, but if you want to look at the description, there's a link in there for that. So that's something I'm trying to get better at this year is adjustments, because if you're just trading to the long side with no, one day it's going to get real ugly. So again, I'm trying to get this trade out from underwater, and time's going to do the trick, right? If you're super bull and you think this is going to 3,000, I've seen this on the internet, it probably is. I don't know. And it actually doesn't matter what I think about it, but the point is that's what I'm doing. I'm looking for a pullback. If it continues to move higher, I have other long trades that I'm in. So, I'm playing both sides. This isn't my only trade. One thing I did, because just to go into the weekend, and let me just switch back to IWM real quick. I just straight up bought some IWM calls. It's the bullish of the indexes, where it broke a new high, 3-4 days ago. Right. So this is the bull. This is the leader. And maybe it's because of the tariffs. Maybe it's because, protectionism, it doesn't matter. But the American small, medium caps are leading the way. So what I did was I said, okay, I'm going to buy some IWM call options 30 days out, Delta 70. And, if we do the euphoria gaps up on Monday, then this will, again, hedge my bear call spread. And real quick, in about a week or so, I'm going to be posting the 4th installment of an RSI series using that RSI period of 4. I talked about this in the last YouTube video about a week or so ago. And the next study is on SPX put credit spreads when that RSI. We're going to talk about different expirations. I'm going to go through 8 years of 7-8 years of back tests and results and profit taking and how that performed in the bull market. So if you're interested in learning more about the RSI, if you come over to the website, Patreon, over on Patreon, you'll see a link in the description here. I just posted the RSI directional call options about a couple weeks ago. There's also RSI trading SPX bull call spreads. And I didn't even mention this on YouTube before, but if you're into butterfly spreads where it's more of a volatility trade, when that RSI gets oversold, one thing you can do is purchase butterfly spreads on SPY, and it talks about the exact strikes and all that stuff. And there's still a few $10 spots left. So you may want to jump on that. I mean, it's not really that much if you just have to get the $15 spot. But anyway, I want to let you know that that's there. And again, I'm going to be posting the 4th installment in about a week, which will talk about SPX put credit spreads. And then we'll look for the new updates up in September. Okay, you guys have a great day. Have a great weekend, and I'll see you at the next update.